Good morning from Abu Dhabi. I am currently away on holiday, having the most amazing time. As I'm taking a quick look at the charts right now, it does look like it is the perfect time to be doing something else, and definitely a great time to be stepping away from the charts. But we are going to dive deep into the price action in this video. We're going to take a look at the overall market and then zoom in a little bit closer and have a look at what Bitcoin and Ethereum specifically are actually up to. So if you are new here, welcome. If you are returning, welcome back. On this channel, we like to just trade price action. We try not to get too much into the fear mongering and things like that. We like to just look at what the charts are telling us, the story that they're telling us, and trade what we see rather than what we emotionally feel. So if that's the kind of trader you want to be sure to smash that like button, hit subscribe if you're not already subscribed, and turn the bell button on to all so that you can be notified every time I upload a video or go live. I am recording whilst I am on holidays, as it's just a little bit easier to do it rather than going live. But let's check out Abu Dhabi before we check out the price action. All right, now let's have a bigger look at what is going on in general in the market. I want to first of all talk about the Dixie over here. Now this W was a W that I had marked out, I believe last week before, when price had hit this one area here where we had the stopping volume candle, and this little area that you can see marked here was where I had marked out to wait for a potential second side W, which we got right here with these two candles. And ever since then, we have been moving up. We have just crossed the 50 EMA, but we're dancing on the line right now where it could reject and come back down, or it could continue to push higher. Now, here's the thing with where price is currently. We do have this very big vector here from the 10th of November that at some point will come back to be recovered. But at this stage, it hasn't been able to make it into that zone at all. So this area here, the bottom of this candle, is a first area that we look for a rejection point. And we do have 1, 2, 3, 4, 5, 6 candles currently on the 4-hour time frame that have not yet been able to break above it. So I'll be watching for price to see if it breaks down below the 50 EMA first of all, and then the following two, which is the 10 and 20. If it does that, then this W could be coming back for a retest. As long as it creates a higher low, you would then expect further move to the upside, which would then mean further move to the downside in the markets in general. So this is one that you've really got to watch for closely right now. If we don't get that higher low and it just continues to fall away, then we're going to have some relief in everything else, and that will give us some short-term upside potential. But it's very, very dependent on what happens on the Dixie number one. So when we consider that the Dixie is currently in the area where it potentially could reject, what we want to then have a look at is the S&P and the NASDAQ and see what areas they're hitting. Now, this vector candle here from the 13th of September is one we've had marked for a while, and we can see here in this little area here, we have tried to attempt it once, but we did reject and sell out of it. Now, the same story could be happening here, where price is just going to come down to recover maybe partially this candle here, create the higher low and move to the upside. That's going to be positive. However, that W on the Dixie would need to fail in order for that to happen. And if it doesn't fail, then this is actually the rejection where we are going to move further down. So what I would be watching for on the S&P is to see if we start to get anywhere into this candle right here, because we have touched on the top of it once. But if price starts to move down into this zone, somewhere around the 200 EMA is going to be the ideal area that you want to see it hold if it's going to have a further continuation to the upside. If we start to break too much below that, and at the same time Dixie's moving up, then we definitely have some more downside coming, unfortunately. And the NASDAQ is in a very similar situation as well, where we can see this was the vector from the 22nd of September that we have been eyeing off. We did almost have a full recovery of it right under the 800 EMA. And ever since then, we've been trending down. However, it hasn't been a harsh sell-off. So this just could be an accumulation period that may have the potential to create a higher low and move to the upside as well. The same thing with the NASDAQ is that it really depends on what price does when it gets back to this candle here. If we can hold above the 200 EMA, that's going to be fairly positive. But if we break the 200 EMA, we probably don't want to break more than 50% of this candle right here. And that's going to be approximately around the 11,131 kind of mark. Looking at Bitcoin spot, we do have a bit of a situation here, which is not a very good situation. And that is that it does look like after the sell-off earlier this month, it does look like we have another M formation forming, which could be an M formation reset, because in addition to that, we do have a breakdown of the previous two levels, and currently we have a retest. So if the spot price can't get back above 15,900, we're gonna have some pretty big trouble, I think, with Bitcoin, and we'll talk about some heat map levels shortly. But looking at the spot chart, it's not looking that positive right now. We really do want to see Bitcoin at least get back above into this zone and be able to hold it there. Otherwise, yeah, kind of doomsday. Now, if we're looking at Ethereum, we kind of have the same situation, a little bit of a different pattern where we do have this sell-off, and this price action here created a H pattern, and sitting right on the candle close of that first leg down there, we do have a break and retest. If you're drawing your lines to the wicks, then we're currently still safe, but with a H pattern, you're really wanting to reassess what price is doing at the candle close of the first peak. So on the spot chart, this is not looking great either. When we have a look at the heat maps currently, we really do have a fairly big battle zone. We have this rise here in open interest, which means that the market maker is matching the other side of every limit order and trying to hold price in an area for a reason. And they usually do that because they're accumulating themselves. And what follows is a fairly large breakout. But whilst we're in this accumulation zone, there's no way going by heat maps to tell which way the breakout is going to be, because you will find fairly large orders above price and equally large orders below price, which is what we're seeing here. So the only real way to anticipate a breakout after a tight consolidation is by assessing what the wicks are doing on the lower time frames, which comes down to experience. So when we have a look at these heat maps right now, we can see here that we've got some fairly large long orders trying to hold Bitcoin above the 15.4 to about 15.6 region, which is where we wicked into once before. And then above price, we have shorts trying to hold price below about 16,000 to 16,100. So yeah, and that's that spot line right there. So yeah, we really want to see Bitcoin get back above, break above these sell orders here if we're to have any chance of a recovery. Otherwise, it's looking fairly sad. So if you're looking for shorts, I'd be looking up here at around that 16 to 16.1, or let's say 15.9 to 16.1 kind of region for the candlesticks to give you the final confirmation of some sort of rejection, and we may get a move to the downside from there. Now, the other thing to note that I find quite interesting about these heat maps right now is that this order right here, at the time that I'm filming this, the 1.9k at 15,700 is very close to the current price. The current price is $15,760. So we're talking $60, $70 away from the current price is where people are trying to buy a fairly large amount. That's between 1.9 to 2,000 BTC worth of orders at that level. So when I see heat map orders that close to current price, that's usually a lot of conviction in the direction. So we definitely have somebody out there trying to get price to move up today as opposed to down. The question is, will they have enough strength if those orders get picked up to move it above 16,100. So now that I see that, that does make me want to go and have a look at the smaller time frames and see if I can see a potential W formation. Even if I did, it's with the intention of only being a short-term scalp, because we are in an overly bearish market. So just be careful about taking any long positions and holding on to them for too long, because most long positions could just be liquidity grabs before further downside. But when you're scalping, that's fine, but it's certainly not an indication of a higher time frame long position at this point in time. So now when I zoom in on the 15-minute time frame, after everything that I've seen, the one positive that I have is this stopping volume candle right here that came in with a real high level of volume from the weekend and the Monday fake move that we did have our 3 hits to the low. So this here right here could have been a final damage W, or this here could be a W that is forming right now, because we've got a stopping volume candle and then we've got this hammer right here, which is come with increased volume, which is a potential positive. But the problem is this, and here's why I wouldn't necessarily be taking long positions at W's right now when normally that is my trade style. The reason for that is because on the way down, probably everything looked like a W, right? So that would have looked like the W, then it took another leg down. So do we have the same situation here where we have what may be looking like a W before it just takes another leg down? So you definitely have to be very conservative with your trading right now. You know, eventually you're going to get the right W, but if you may have many losses before you end up with one win. Just because of the overall conditions, it's definitely the time to play it safe, because as I mentioned, with these Ws, if you have a look along the whole way, we've rejected around the 50 EMA many times. So the safer play right now is going to be to let that 50 EMA break. You want to see a break with volume as well. So something like this, where we had this green candle break it through, but after it breaks through, it has to successfully retest. That's not what happened here. So yeah, if you're going to go long, I mean, it may not even be at this price. We may come down a bit further, but I'm more talking about the pattern that you want to see as opposed to what the price will be at the time. So until we get above and successfully retest that 50 EMA, I would remain bearish for now and just expect every move to the upside to just be a liquidity grab. And I would suspect that that's probably not going to end until these tracking of the FTX hacker stops selling off the ETH. We're probably going to just continue struggling until that is over and done with. The other thing too that I really want to caution you about is, even though this has the potential to look like a W formation currently, the problem that we have is that we are now under last week's low of the week. So when we get under the last week's low of the week, that then turns from a support level to a resistance level, and we're currently rejecting there too. So again, that is why I don't think it's a good idea to try and take second leg W trades. If we are going to move to the upside, we will break back above that as well as the 50 EMA. Successful retest, then we're good to go. Anything before that, I think you're just gambling. Having a look at Ethereum, it's very much a similar situation. Same thing, where we have this potential to be a H pattern now. We had a high volume stopping volume candle here. We also have a hammer here. So everything looks good. However, again, we've been rejecting under this 50 EMA for a really long time. So I would not jump ahead into long positions right now. If you have short positions, then, you know, it's fine to keep holding. But again, Ethereum is well and truly under its low of the week. So again, very bearish. and it's also under the 50 EMA, very bearish. So to play it safe, if you're going to have a change in trend, we must get above that 50 EMA, retest and hold it. Otherwise, stay bearish in my opinion and continue staying short. When we have a look at high block, I just want to have a look at some higher level targets that we may potentially reach. Now, this is more long term. This is not necessarily a day trading target, but I can see some fairly large liquidity growing around the 15,100 level. I think I marked this out a couple of weeks ago. This area has been here since the first drop. So it's definitely an area of concern for the moment, but this area here is also growing larger. Now, in order for that area to grow larger, it means that people are opening low leverage long positions. So there are people still out there that believe the bottom is in, and this level here would be their liquidation point for their leverage. So 13,400 is that region. It's kind of, let's say 13.3 to about 13,550 is the area. In order for us to get down there though, we would have to break below about 15K. So whilst we're above 15K, this isn't a level worth worrying about, but if we break below it, that could be the next level. Above price, however, is where we have the most significant level. And again, this means that more people are currently in open short positions than there are long positions. And that's fine, and that makes sense because we are terribly bearish. But you just have to keep in mind that if you don't take your profits, that market maker can swing price around so damn fast in your sleep when you're not noticing, something like that, and literally take away everything that you thought was an amazing position to have. So that level that we're looking at is still at around the 17K. So 17 to about 17.4 is still the same level to look out for. At some point in time, that is going to be a target for the market maker. But because we have such bearish crypto news, we're going to have some really good news that gives the market maker the excuse to send price up here. So when we divert our attention to the news now, what really could it be? These times that I have listed are still in Melbourne time, even though I'm in Abu Dhabi, because just for consistency for this channel. So today is a free trading day. We don't really have anything going on. We do have some FOMC members speaking. I mean, that depending on what they're talking about, what comes out of that they can potentially be market movers, but I wouldn't expect them to be large market movers. That's all for tomorrow. We also have a bank holiday for Asia. Now, that is supposed to mean that Asia does nothing, but I have found with most Asia bank holidays, we actually, more often than not, we do move the market. Maybe it's just because it's opposite behavior, because the Asia behavior is to consolidate, to just set the initial high and the low of the day. So sometimes that a bank holiday can throw that out of whack. So definitely watch out for Asia session tomorrow. Other than that, the only other real kind of news event that I think could have some potential to move markets really is the FOMC meeting minutes. That's not until Thursday morning. And all of these other ones here, they may do something, but I couldn't imagine that they would do something fairly significant. So this is going to be the main one, which may mean, considering that's Thursday, that we don't get our midweek reversal until Thursday, which would then mean if the current trend is down and we don't get a break above the 50 EMA, then the start of the week is a bearish trend and we're looking for a midweek reversal around Thursday. Friday, US has a bank holiday worth noting as well. Now, finally, I just want to have a look at the CME chart because it is showing us something a little bit interesting. You can see here, I've marked this area, which I'll show you why in a second, but we can see here on the daily chart currently that the CME chart has put in a H pattern into that zone on the daily. And so it basically means decision point at this point. Now that the second side of the H is complete, this is where we need to go to smaller time frames to see if we can see a change in trend starting to form to move us out to the upside, or do we just break the level and start to create new lows? Now, the reason that that level there is marked is because of these two daily candle vector zones right here, which is kind of our last hope. Well, it's not our last hope. There is more hope below, but it's like scary. So that level is sitting between 13,650 and 15,535. So this is really where we want to see Bitcoin hold. But I guess, I mean, at this point in time, it does look like basically everybody has given up on Bitcoin, which does start to make it a good long-term investment kind of area, as long as you've got the time to wait for it to do what it needs to do, which could be more than a year away. If we do break below these candles here, we've got this other zone on the CME chart, this candle here, which sadly lies between 11,950 and 13,000. And this candle here has already been fully recovered. So that's sitting at around the 10K mark. So hopefully we stay away from there. The only other one worth pointing out is this one, which is between 11,485 and 11,945. But we don't worry about these levels down here unless we break the first level. We're just dealing with one level at a time. Currently, that is the 13,650 to 15,535. And again, once you get those levels, that's where it's great to use the heat maps to check the actual reality of it. So the reality of it is there is liquidity around the 15K. So we may hold that for now. If we break below, the next one is the 13.4, and both of those fall within this box zone right here. All right, that's all I've got for you today. I will try to do another update tomorrow. I hope you're having an amazing week, even though the price is dumping. Just remember that the more price falls, the more opportunity you have for your future. Whilst it may be scary today, it could be setting you up for something great if you just stick around. Be sure to smash that like button, hit subscribe if you have not hit subscribe already, turn the bell notification to all, and I'll see you next time.